Hi, folks. Rick Wedell here. I'm the Chief Investment Officer at RFG. Thought we'd come to you today with a brief market update, kind of let you know what's going on out there. Market's in a little bit of wait and see mode. S&P 500 right at 4450 as I'm speaking. And, that is right in the middle of that 4,400 to 4,500 range that it feels like we've been talking about for some time now. I feel a little bit like a broken record on this. The biggest thing this week is really the Fed meeting on Wednesday. Widely expected that the Fed will leave rates unchanged. Nobody's really looking for them to raise rates. That's not really warranted, in my opinion, by any of the inflation data that we're seeing right now. However, there will be a lot of eyes on the tone of that Fed conversation, what their forecasts are, really trying to read the tea leaves as to what Powell and the rest of the folks on the Fed are thinking in terms of inflation and interest rates going forward. It's always interesting to me when people are focused on the tone of the Fed, because let's be real, the Fed is data dependent, as they like to, point out frequently, as they themselves like to point out frequently. They are looking at the economy on a monthly basis, weekly basis, daily basis, trying to determine that inevitable tug of war between interest rates and unemployment, and thinking about what they may or may not do. And so, reading the tea leaves about what the Fed thinks that they might do in 2024 or 2025 is a little, specious in my mind, just given the fact that we'll have to wait and see based on what's going on in inflation. I would note that the most recent data on expectations of inflation, so survey data based on what you guys are thinking in terms of price increases going forward, is down at the lowest level in 2 years, which is a good sign. Generally, inflation expectations flow through into inflation itself. So that's a great thing. And I would just remind everybody listening out there that lower inflation doesn't mean lower prices. It actually means that prices stop going up. So, if you're walking around the grocery store and looking at the price of eggs and thinking to yourself, well, these don't seem any lower than, recently. So what is Rick talking about? It really is more of a question of, have prices risen recently as opposed to have prices gone down? We're really targeting the former, not the latter. Last but not least, there is a United Auto Workers strike out there. I've gotten a number of inbound questions on this and its overall impact. And I think I would tell you just broadly that the overall impact on the market is not much. Certainly, if you are a shareholder of Ford or if you are a shareholder of GM, this is a very big deal. And if you're a shareholder of some of the auto parts suppliers, this is a very big deal. And similarly, if you're a shareholder of Toyota or Volkswagen or one of their competitors, this is also a big deal, probably to the positive. So if you own a diversified portfolio, not likely to really flow through or impact you too much. And I think you're seeing that broadly in the market. You're not seeing the market wildly selling off in one direction or another. This is important to a number of companies, however, not important to the broad economy overall. There are plenty of shifts in spending and shifts in income that kick into play here that avoid it being, really anything more than a minor bump in the road that most people won't even feel in their portfolio. So with that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a great day, and I look forward to talking to you again soon.